When we plot the 10-year yield against a chart of GDP growth in the United States, so basically a line showing us how much the economy is growing each year, we see there is a very tight correlation between the two. And so it's only natural that when GDP growth is declining, that you would see the 10-year yield declining at the same time. The fact that the 10-year yield has been rising over the last couple of months is actually telling us that the bond market is not worried about a recession happening right now. So what does this all mean? Does that mean that we should be completely ignoring this yield curve uninversion? Probably not, because when we add the United States unemployment rate on top of the yield curve, we see that there isn't really much evidence today to suggest that we aren't towards the end of the business cycle. So far, the unemployment rate has curled up and began to move higher. It's very possible that if the yield curve continues to steepen, the unemployment rate will continue to move higher and potentially trigger an economic recession. However, the fact that bond yields have been moving higher during today's yield curve uninversion could be telling us that we still have a little bit of time before this next recession actually begins. As a result, we are officially extending our timeline for a recession in this video. With bond yields coming back towards 5% today, it tells us that higher growth and economic resilience are being priced in by financial markets. Now, what does this all mean for the stock market? As you may have seen in the last couple of episodes, spikes in bond yields aren't such a great thing for the stock market that has typically seen some corrections in these kinds of environments, which could lead to some short-term volatility in markets today. But in general, with a recession once again being delayed, it seems like any market volatility right now could be an attractive opportunity to buy the dip on markets. Although we are hedged against short-term volatility, the active trades that we have on our website are still net long on the stock market.